Hello everyone, I am Jong-Hwa Kim, the President of Busan Finance Center. It is a great pleasure and an honor to introduce this global webinar series on AI in finance in Asia. I would like to express my sincere gratitude to Dr. Jochen Peppenbrock of NVIDIA and Dr. Jochen Biederman of WAIFC. The rapid growth in digital technology, combined with COVID-19 in recent years, led many industries actively introduce AI. The financial industry is also seeing better productivity thanks to highly advanced technology, quality data, and the rise in contactless transactions. Korea is also leveraging AI technology, especially in work automation and conversational bots. AI is also bringing higher efficiency in credit rating, loan appraisal, and asset management for financial companies. The Korean government has announced guidelines on the use of AI in financial services this July to promote the use of AI in the financial sector and improve confidence in AI-based financial services. This guideline aims to cover areas under regulation, minimize damages to financial consumers or financial institutions, clarify responsibility of AI-based financial transactions, and others. Here in Busan, BNK Busan Bank is gaining high popularity among wealth management customers thanks to robo-advisors. Furthermore, the abnormal financial transaction detection system analyzes and detects patterns of financial transactions and cash flows in real time to prevent financial damages from voice phishing. I hope this webinar shed light on how AI technology is used in an efficient manner, especially in Asia, how the financial industry can minimize the negative impact of AI and protect consumers. In particular, it will be also meaningful to gather and seek global implications on the findings from previous webinars held in North America, Europe, and Africa. Thank you very much.
A very warm welcome, good morning and good afternoon to everyone joining this Asian edition of the global webinar series on AI in finance. I'm part of the World Economic Forum's Artificial Intelligence and Machine Learning team, and I manage the Global AI Action Alliance, which was launched by the forum in January this year. The Global AI Action Alliance is a collaborative platform for fostering projects and partnerships related to responsible AI, as well as AI for SDGs. The World Economic Forum is pleased to continue this collaboration with the World Alliance of International Financial Centers and NVIDIA on this important topic. As some of you might be aware, the forum has presence in Asia through its offices in both Tokyo and Beijing, and in 2018, we launched the Center for the Fourth Industrial Revolution in India. Through our offices in Asia, we continue to explore how emerging technologies and artificial intelligence can be leveraged across multiple sectors. Our goal is to foster initiatives and efforts that balance innovation with regulation and governance. We work across a range of topics and sectors, which include artificial intelligence in agriculture, healthcare, education, etc. The Asian market is seeing rapid growth when it comes to AI in financial services. This includes a number of use cases in back-end operations and also DCBs, digital challenger banks, which are leveraging artificial intelligence and new technologies to disrupt financial services market. Through the forum's Global AI Action Alliance, we are exploring a number of topics related to AI in finance as well. We are currently finalizing a partnership with the Monetary Authority of Singapore on the Veritas initiative, which aims to address implementation challenges in the responsible use of artificial intelligence and data analytics in finance. We are also in the early stages of exploring a new project on responsible investment in AI and associated risk and ESG impact metrics. Through this webinar series, we aim to brainstorm with important actors in the financial services domain and to foster collaboration between stakeholders to truly leverage the benefits of AI in finance while mitigating its risks. I really hope you enjoy this webinar and hope to collaborate with you on the Global AI Action Alliance and this important topic. Thank you so much.
Hello, and many thanks to Jonghwa Kim for the very kind introduction. And thanks to the World Association of International Financial Centers, especially YACM, and NVIDIA and the World Economic Forum for the invitation to be with you today. What I'm going to talk about is some of the big trends that we're seeing, some of the big challenges and opportunities that we're seeing in the context of finance and artificial intelligence. What I'm going to do is I'm going to share my screen to show a few slides to take us through this discussion. So we think about AI and finance, we have to realize that this is a combination of two things. It is both a general process of digitization and datafication, what the World Economic Forum has called the fourth industrial revolution, the digitization of everything. But it is also a process of financial transformation, of digital financial transformation. And it is when we bring these two processes together, essentially datafication along with digitization of finance, that we can begin thinking about this context of AI and finance. And I think when we think about digitization of finance, we need to think about this as a long-term process. Finance has digitized over a period of really most of the past century. But it's really been since the 1970s where we've seen this process accelerate. And of course, over the past 10 years, we have seen the advent of a range of new technologies, in particular in the context of data analytics and forms of machine learning and artificial intelligence. And I think that it is really in the coming decade where we are seeing these big picture trends in both digitization of finance as well as the digitization and datafication processes coming together. And we've been talking about artificial intelligence for decades, really. But what has changed today? And I think it is this long-term process where ever more digital data is being created, where data storage has become ever cheaper and more available, where communications has become ever cheaper, more available, and more capable of dealing with ever larger amounts of data. And computing power in the context of Moore's Law has continued to provide us more scope to bring these pieces together along with developments in the context of analytics. And when we think about finance, we have to realize that finance is one of the leading industries in applying resources to AI and other techniques. Why? Because finance is, particularly when we think about things like stock markets, characterized by large amounts of digitized structured data. And in many ways, large amounts of data, ideally digitized and even better if they're structured, provides an ideal training mechanism for AI mechanisms. So finance is coming in as a very fertile ground. Second, of course, the financial sector has the financial resources in the context of R&D spending in the use of different forms of IT and most recently AI, but even looking forward into quantum computing and beyond. If we think about the financial services sector, at least since the early 1990s, every single year, financial services has been one of the three largest spenders on tech. And if we think about the biggest investors in cutting edge IT, in AI, it will invariably be government agencies, your sort of NASA's and the like. Big tech companies, of course, but also financial services firms. And why is this the case? It's because in finance, there is a continual arms race in the context of analytics and the application of those analytics to gain an edge, particularly in trading processes. And if we think about the last 30 years of digitization of stock markets, a continual process of ever more computing power applied to transactions, competitions between firms. And so what we see are very strong financial incentives for the financial services sector to apply new technologies, particularly in the context of trading. And finally, financial services has the human resources, both from the standpoint of being one of your better paid sectors in terms of employing tech graduates, but also from the standpoint of having its own dedicated field of analytics, quantitative finance, which is often at the very cutting edge of using various forms of quantitative research techniques, and which then have their application directly in the financial services industry. And I think we can think about these things coming together, a process of digitization, of datafication, transforming finance, combined with these wider trends of digitization and datafication, and the application of new forms of analytics, including machine learning and AI. And if we think about COVID over the past year has further driven the digitization of everything, but it's driven digitization of finance probably more than any other area. And the areas, if we are thinking about digitization resulting from COVID, center around use of technology for regulation and supervision, particularly in the context of digital reporting, AML and market integrity, payments and central bank digital currencies, and of course, big tech platforms and data analytics. And I think when we think about use cases in the context of finance, one of the most rapidly growing with digitization is digital risks, and so data security. Customer interface, yes, we can talk about chatbots, but really, when we think about the core uses of AI in financial services, it's around operations and risk management, and it's around finance and investment, particularly around trading, investment markets, robo-advisory systems, automation of trading, quantitative trading, high-frequency trading. All of these are very heavily dependent on datafied processes, including increasingly machine learning and AI. Likewise, in the context of lending, particularly as platform lending continues to evolve and big platforms like Ant or Amazon build large pools of data, which then they use as the basis of automated lending systems, we see the development and application of machine learning and AI. Payments and infrastructure, but of course also compliance and regulation. When we think about risks, there are questions about financial stability, but there are real questions about fairness, about consumer and investor protection, about market integrity. Key, ever more digitization brings with it ever more data risks, dependency on sources, availability of data, interdependence between different data users, and of course, cybersecurity. And if we think about this from a legal or regulatory standpoint, we could think about authorization, we could think about data protection, we could think about data privacy, we could think about focusing on a series of protected factors. But really, the key from the financial services standpoint is that financial services is not only one of the most digitized industries, one of the most globalized industries, but it's also one of the most regulated industries. And what that means is that we have a comprehensive regulatory framework which focuses on the participants in those markets. And as a result, particularly as a result of implementation of personal accountability frameworks in major financial centers all across the world, we already have the basis for regulating the use of AI in financial services. And of course, what human accountability for the outcome of tech systems produces is the necessity of explainability systems so that the humans can understand it, the necessity of due diligence processes, and the ability to deliver that information to regulators, potentially courts, and also customers. And so in many ways, I think actually financial services, from the standpoint of trying to determine how to address these sort of micro legal and regulatory issues, is actually well placed. And I think that these personal accountability regimes, as a mechanism for bringing the human into the loop, the idea that there cannot be a black box in financial services, for the simple reason that someone is already legally responsible in the context of any regulated firm or regulated activity. And my co-authors and I would actually argue that this is probably the best way forward in any regulated industry. There is also, however, a question about using AI in regulation itself. And of course, if we think about digitization, if we think about datafication, if we think about impact on COVID, one of the biggest areas of growth is on the regulatory side, what we would call regtech, souptech, use of technology for regulatory compliance, monitoring, enforcement, implementation, and system design. So if we think about processes whereby regulators, particularly in international financial centers, are increasingly requiring reports to be done in a digital format, which then provides digitally native information for regulators and supervisors, it also provides the basis for datafication, including machine learning and AI techniques. And so what we are seeing are an increasing range of central banks and regulators and supervisors across the world as they digitize and datafy their own processes and regimes of rules, looking at how they can apply AI in the context of marketing, of enforcement, of a better achieving their regulatory objectives. And I think when we think more broadly to competitiveness, increasingly societies all across the world, and particularly major international financial centers, are recognizing the central role of data in their economies, in their competitiveness, in their future. Why? For the simple reason that finance, as one of the most digitized industries, is increasingly a data industry. And that means that we are dealing with not only financial regulatory issues, but also with data regulatory issues. And we are seeing a variety of different approaches evolving in different jurisdictions to data, in particular to ensure national stability, financial stability, consumer protection, and development. And I think an increasing range of models looking at how can we use new technologies to support the aggregation and availability of data to support financial services and wider sustainable development. Aspects such as open banking, or in India, new data aggregators, or systems in China for new systems of data storage and use. All of these are questions that when we think about IFC competitiveness going forward are central. Thank you very much.
Series presented to you by World Economic Forum, World Alliance of International Financial Centers, and NVIDIA. Our focus is on artificial intelligence, explainability, and trustworthiness in financial services. Recently, regulators and lawmakers around the world have proposed new laws that will shape how companies and organizations use AI. The concept of trustworthy AI is central to complying with these new regulations. Successful and ethical AI adoption means harnessing its amazing potential while implementing the principles of fair, trustworthy, and explainable AI at the same time. An entire industry and research is currently being built around this topic, which NVIDIA is actively supporting by using accelerated computing and smart algorithms to implement trustworthy AI principles. A few examples for these approaches and algorithms include AI-generated synthetic data and federated learning, post hoc explainability models like Shapley, model risk and model lifecycle management, handling large models and a large quantity of models for diversity, algorithmic auditing, stress testing, supporting the AI certification process, and model governance. Additional factors for explainable AI include data gathering, management, organizational perspective, and the strategic technology foundations required to compute and manage AI models in varying cloud infrastructure architectures. NVIDIA can be a key partner as you move forward on your AI journey. We work globally, across industries and technologies, at all stages of AI adoption, from imagining the art of the possible to work through issues of trustworthy AI. I am now looking forward to the panel and our discussion. We are currently working on an analysis and summary of the past webinars in this series in North America, Europe, and Africa, and we are happy to share our insights with you. So stay tuned and enjoy the panel discussion. Thank you.
All right. Good morning, good afternoon, good evening, depending on different time zones. Welcome to this panel discussion on AI for financial services. It's an amazing world. It's an amazing opportunity. Possibly the situation in the background, maybe I can start with a question on COVID. What happened in this last 18 months has been like possibly we would not like to remember for too long, but then one thing good has happened is the role of technology, which we can see in terms of adoption. We could see the adoption of financial products, services, seeing a huge uplift, and that has been perhaps one of the highlights here. So Jan, maybe if I can start here with you and see because of this whole change in time, where do you see this world going, and how do you think AI will be playing a big role in terms of technology absorption through these application uplift?
First of all, thank you for having me. It's great to be on this panel. Really excited to participate. Obviously, quite a large question that we could spend the entire panel time discussing where we're going. But briefly, I think, as you point out, there have been very large changes that we've seen in a very short amount of time in terms of the adoption of technology. And it's widespread. It's not, we're obviously touching and talking a lot about banking, but if you even look at how readily people are now buying a car online, arranging financing, having it delivered to their doorstep, I think we really are talking about. Specifically with regards to finance, I think it certainly does show that through the, again, in the space that I follow most closely, which is investment and trading, there have been millions of people who, through this period, have entered the market, have begun to invest their own money a lot more actively than they have done before. And they've done all of it long distance digitally without ever setting foot into a bank or a brokerage. And I think this trend is only just the beginning. The question now is, how do you develop scalable solutions to be able to serve this deluge of clients? For example, Robinhood alone has opened about 11 million accounts last year. You cannot possibly hire enough financial advisors to service them all. And so I think there is a very clear role for AI to offer a kind of solution that it has, for example, in other industries. If you think about intelligent assistants, we have them in other areas. There's no reason why we couldn't have more of that in investing and trading as well. So I think this is where we're largely headed. I think you're going to see far better trading tools, investment advisory tools being developed because the demand and almost a forced level of trust has really been stepped up. For a while, people just didn't have any choice, and so they tried things that maybe before they would have shied away. So broadly, again, to summarize, my view is that I think we're at the beginning of a big wave of innovation in this space that I think has been kickstarted by the really just due to the nature of the situation.
Thank you, Jan. Thank you for a good beginning on the discussion. Shota, if I can come over to you, what possibly we have seen is different domains of leveraging AI in financial services. Any specific domains that we possibly should be looking at prioritizing, and something which some of those domains which we should possibly avoid at this point of time, considering that AI is still, I believe, for most of us, in the nascent stage.
That's a very good question. I think that AI is just a means to an end, and where I see the prioritization is not necessarily within kind of the specifics of any type of AI or particular algorithms or infrastructure or hardware. I think all that's advancing. As Jan pointed out, what's really shifted with COVID is the overall awareness, I think, in society that digitization is important and it's happening. And so what I think should be prioritized is, number one, really, how do you connect the dots between the people who know about AI and the people who have domain expertise, whether it's finance or pharma or what have you, because that gap is actually inhibiting the not fundamental research, but really the ability to put in action some of the advances that we've seen. I think that's one, and then the second is also around frameworks for how to deal with data, because I think again, as data volume and velocity have increased, we're going to get into the regulation issue, but also how do you actually share it? What are efficient protocols for sharing it? What are efficient protocols for managing the data, et cetera? And that's also a potential accelerator and bottleneck to getting sort of to the next step. So I think that within AI, there's all sorts of interesting things happening on the research side, but that's going to happen anyway. I'm really sort of focused around how do you get out there and connect the dots, across the domain knowledge and across sort of the data sharing and governance.
Thank you, Shota. Thank you so much. Possibly jumping into, you mentioned about the data part. Maybe there's another aspect on considering that we are dealing with financial services. And Sian, you come from a data science background. How do you think data is becoming, because being financial services is more sensitive data that we're dealing with, and without data, AI algorithms are so difficult to learn, so difficult to implement. Now, how do you really see managing this particular ecosystem of making the data available, but then also ensuring that there is privacy of data is also being maintained, that consumers are protected? So in this whole logic of balancing it, if you can please talk.
Okay, thank you. It's a great question. So I'd like just answer from some technical direction. So basically, maybe you know already that there is a technique called federated learning. So what is federated learning means that the data do not move. So every bank, every customer have their own data in their own hand. The model moves. So the machine learning model or the deep learning model will move from one part to another to make sure that you obtained the model, but you cannot recover the original data from the model. It only includes some parameters that's so difficult to recover its original data format resource. So this is one technique a lot of people are doing currently to solve the data sharing privacy issue, because both finance and healthcare are so privacy related. So we need to guarantee that we are protected and we enjoy the service. So federated learning is possibly one way that can partly solve this problem, but actually, the topic is so huge. So people will try to build some general target in general to help people in a better way, especially during this special period of COVID-19, right? So I think technically speaking, there will be one solution. And maybe another one is to build more financial infrastructure, such as the financial cloud. So there are several cases in China already, the Ant financial cloud in Alibaba, right? They built something interesting to service millions of small and middle level business to help that kind of company with only maybe 5 or 10 people, so that their how to say, their right and their benefit can also be protected, and to be their application of money can be also be dealt with in a very quick way. And you know, there are millions of small companies globally, so they want to they need the financial service, and they want them to be treated in a very quick way. So there are several infrastructure ways to deal with this. Yeah, thank you very much. Yeah.
Thank you, Zian. Thank you so much. Ian, moving over to you, while investment for sure is one of the huge opportunity, another big area is banking and insurance. And considering that beside the industry, government also has to play a big role if we really have to enhance the role of AI in adoption in banking and insurance. So where do you think how possibly government can play a bigger role now and as well as in support of industry, along with the industry?
It's a very good question. And actually, this is obviously something that we as a kind of a fintech startup think about quite a lot. And one of the areas, it's not the only area, but one of the areas that we see where the government could potentially change the attitude is currently in banking. As you know, there are just, the regulatory framework is getting tougher and tougher every year. There are a lot of things that you need to have in place as a financial institution. And these things are getting more demanding, both on time and resources for an institution over time. What I think this has created is a kind of a barrier to entry to new entrants who might eventually represent this wave of innovation, because oftentimes innovation tends to happen outside and then pushes the legacy institutions to start to adopt some of that. In banking, that's quite difficult, because in order to become an innovative institution in the space, you still need to follow quite a lot of these regulatory requirements, just like a large institution does. And it creates a moat for them, which means that they themselves feel like they need to innovate less. Now, I think in some sense, COVID has helped in this case, because banks were forced to innovate because they had no other way in potentially engaging their users. The same for insurance companies. But I would say the government should at first look at where is it that some of the regulatory framework might actually be holding back innovation, because it's effectively creating a very comfortable environment for the incumbents and not incentivizing them to innovate. Now, banks themselves, this is probably better a question for Shota, who I'm sure is going to have something to say on this. But as he mentioned before, he had been in a large bank, and innovation inside a large institution takes place very differently than in a small startup. And so what we've seen is in places where regulatory framework has not been completely stifling, you have had a wave of things emerge. However, in order to penetrate deeper into banking itself, I think we are going to have to take another look at the overall framework and see how we could potentially adjust some of this without obviously sacrificing the well-being and trust and security of the end consumer, to strike the right balance between innovation and security, if that makes sense. I would say that certainly is one area where the government should take a look at the framework. There are obviously others that I want to let somebody else speak as well, but there are others where then you need to have the concerns about privacy, the concerns about using data to train all of these models and so on. But that's probably the one that I run into every day, so I wanted to highlight it.
Thank you, Sean. Thank you, Ian. Thank you. Shota, if you can also like to add to this question, maybe possibly your views, considering you also have lots of experience behind, and also possibly talk about when we're talking about banking and insurance in terms of because the whole technology is being absorbed in such a way, how the skilling and reskilling part is coming into the picture in larger workforces.
Right. So, I mean, to address sort of the first topic around regulation and government's role. So I'm always a believer that kind of the technology runs ahead of regulation. And so, to Shanchao's point, for example, technical solutions such as federated learning, or in some cases you could learn on I don't know, homomorphically encrypted data, all sorts of things that helps the security, and people who are conscious about security will adopt those techniques. So really the issue is how do you raise consciousness? The issue that Jan brought up earlier with Robinhood and sort of the so-called gamification of investing. So, that's also another issue with the literacy overall of trading and finance. So I think that the technologies will always present themselves. And I think what government needs to do is to sort of understand where the baseline is in terms of understanding of the implications of some of these technologies. And there, I think the issues are much larger in adjacent areas such as cryptocurrencies and climate risks. And I think there it's really a bigger topic. AI, itself, I think that it's really around kind of I don't know if it's regulating, but sort of creating standards around how to again deal with the data, et cetera, and raising the awareness of what are the important issues that people need to be aware of. And then, of course, the technical solutions will kind of individually fight, and kind of the best solutions will probably propagate. That's sort of my intuition there. And with regard to kind of the innovation question and scaling within large organizations such as banking and insurance, so it's always I don't know if the banks are not a singular organism where there's some locus of consciousness and they say we need to innovate. I think everyone is trying to innovate, but there are all sorts of friction. So when I was working in a large organization, everyone there was very conscientious of trying to innovate. I think that we had too many committees around innovation. That was part of the problem. So I think there's always going to be this tension between small agile startups and large institutions. I don't think that that's going to go away. I think that the question is how do you collaborate? So it's not this sort of polar opposites, but really bring together new innovations from more nimble organizations, and how do you sort of adopt them? And I think that institutions with lots of scale, reach, and capital can really sort of bring that to the fore. So I think that there's sort of already an ecosystem to facilitate that. Although you do in some cases see some anti-competitive behavior where you're trying to crush some innovation. But fundamentally, in terms of really kind of bringing up the level, it just goes back to, I keep saying the same thing, is really sort of raising the level of consciousness, literacy, understanding of what the implications are and what's technically possible versus what you want to do. And once that connection is reached, then I think banks, insurance companies will make better decisions investing in startups, in selecting partners to work with, and vice versa. And I'm hoping that closing that loop will go a lot further, than trying to impose regulations or rules or things like that.
No, thank you, Shweta. This is a really interesting view. One is obviously larger organizations struggling for, possibly one of the ways is insourcing of innovation from startups who are much more nimble. There is this another battle of jobs, Zian, which is how do you really shape the skilling and reskilling requirements for new type of jobs which are emerging, and considering the whole fear that people will lose the jobs. So, and that fear is also not unreal. There is lots to this whole thing around. Zian, from your side, anything which possibly the discussion around it, and what could be the philosophy, or what could be the approach from the industry perspective, and even from the larger organization perspective, the government policy, etc.
Okay, thank you for the next question, and thank you for sharing from Ian and Shweta. So I think you already covered so many really wonderful points. I think from my side, I would like to just share some real cases. So the first one is that 2 years before, I built an AI system for a bank in China, so who have 50 million customers, business customers, not personal customers, but companies and universities in China. So the AI system was to rank the credit of all these bank accounts, right? So and actually it fits the scalability problem because it's needed to be real time, low latency, and their requirement. So they pay and they use account daily, right? So they have the bank account and the money is actually huge. They actually travel millions and billions level dollars actually every day through the bank, right? So it was very challenging because you have to keep track of every record and to decide whether this using of the bank's account is legal or not. Because there is a background issue is that the bank will release some amount of credit to every companies cooperated with. So for example, I will give you 5 billion this year for the credit. Means that you can use the money inside my bank, but do not, you obtain the 5 billion from my bank and you save the money to another bank. That is actually not allowed, but you can never detect the information from other bank. So we have to use a lot of features to keep this kind of record things. That is very interesting. So a lot of infrastructure designing happening and a lot of explainable AI. So why do you think this account is risky, or why do you think it's healthy? How should we offline connect with the people there to better make a healthy connection between the bank and the VIP customer? There are a lot of issues there. So we worked for several years on this case. This is the first case, and it's really interesting during all the scenes. So we designed a lot of features, a lot of machine learning techniques, a lot of we need to care about all the natural language processing, the text-based information that the news, the company released, and all the digital financial report from the company, and even from the universities in China. They have some companies, sub-companies inside the university, like startups. So I think this first case that we did face a lot of problem. Actually, the second one is actually what myself used in the service in China. There are two major financial related companies which are not banks but are AI companies. One is named Alibaba, who have the Alipay used by billion level people in China. The second one is actually WeChat, developed by Tencent. It also have billion level users in China. The major issue to make it to be scalability is that how could you build a story so that people are willing to use a digital wallet inside their smartphone, not go to ATM or go to the bank windows anymore. So WeChat did a very, very smart thing. So they connect the account with a red pocket. Maybe in Japanese it named Nyentama, right? So every year, in the end of the year, they will kind of share money to the children, maybe $100 or something like it. They connect that service with the WeChat Pay. So for one night, there are 1 billion, maybe 500 million people around connect their real bank account with this web service of paying, saving money in the web and in the cloud. Actually, this is another very good case to make the service to be scalable nationally in the country, because I have been living in Japan for more than 15 years. But every day I still need to bring cash to a lot of supermarkets. So even I have a credit card, I have a pay, I have a lot of digital pays in my smartphone. But for more than 50% of the time, I need to bring cash. So this means that especially during this period, there are possibly some virus in the cash, right? So you never know. So I hope in the future, in the near future, the Japanese government is also pushing forward how to make everything to be electronic, to be no cash anymore and no cash working. But it still need some time to make things better. Yeah, it's just two real cases. Yeah, thank you very much. Yeah,
I mean, Shanchao, if I may, I totally agree with you, and I suffer the same thing because my bank just suffered some IT outages. So,
Okay.
but part of
Thank
the challenge to reaching scalability is
Mhm.
not just the clever people working on the algorithms, but also
Yeah.
how do you train people to work on the infrastructure and the high performance
Exactly.
computing?
Yes.
Because that's really the bottleneck.
Yeah, I totally agree. Yeah. You
yeah.
know the Mizuho bank issue.
Yeah.
Yeah.
So,
Yeah.
so unless you have the baseline kind of, the people who can design the pipelines and the infrastructure and the deployment systems to actually kind of scale at that level, and that's kind of fewer in terms of interest and people's interests in learning about this than the sort of more sexy algorithms in AI. Yeah. So,
I totally agree. Thank you, Shad. Thank you very much.
thank you.
Thank you, Zian, and thanks, Shruta, for the intervention. I think it's very interesting discussion, the way that transition is happening. And the story around cash is for every country today. I think India is also going through a major transition, like we possibly have seen the role of digital money so much now, maybe learning story from MoneyPay, or how do we integrate it? There's a lot of digital companies moving in that direction. So maybe, Jan, moving over to you, see this whole trust part of algorithms, and then considering that you coming in from investment world, how much your clients really, the transparency and the issue around, like whether it's the black box decision making, how do you see this whole trust and transparency for AI algorithms to be coming for a larger adoption? And for larger, and then across the services.
So it's no doubt a big issue. It's definitely something that, again, we spend quite a lot of time thinking about, talking to users about, and so on. What I think I've come to believe is that it's probably not trying to turn AI from a black box into something that is fully understandable to everybody, maybe a losing battle, because actually in reality, even inside the actual domain, there is an element of not entirely understanding. Unlike, for example, when you are doing a statistical regression or when you're writing down a mathematical formula, we cannot do the same thing with a lot of the machine learning results, right? We are able to understand and explain the framework, but the actual result and the application are very difficult to try and explain and make sure that every user of it is fully comfortable with how this operates. But actually, I think that's okay. I think that AI might be more in the domain of how people treat, let's say, vaccinations or medication. You don't always, actually, most people don't understand what goes into a medicine or a vaccination. Doesn't mean that they won't take it, but they want to see empirical evidence that it's beneficial, that it helps, and develop trust that way. So by observing results, I think AI might be in that category where people will need to see a lot of evidence that this is being deployed, that people like them, are using it, that the results look good and they can trust it, and then they will trust it themselves. I don't think that the way to get people to trust it is to try and explain how machine learning works to every single user that we have. So this is what, that's the path that we've taken. The system that we've developed is, the best way to think about it is Google Maps for investing, because it's not trying to tell people what to do. It's trying to organize the data in a way that helps people make decisions. And they could say, well, but I don't know how you've come to these conclusions, and I don't understand what goes exactly into it. And so what we instead do, rather than take everybody on a course in machine learning, is to show them how making decisions based on this output has worked before. And so all of a sudden they start to see other people using it. They see that actually some of the things that it had pointed out had worked before, and so on. Similarly, maybe at first when you used Google Maps and it told you that there was going to be a lot of traffic down a particular lane, you said, okay, whatever, what does the machine know? Then you get stuck in a traffic jam for 3 hours. And the next time you think, what's the worst that can happen? I'll give it a try. And slowly you realize that it can save you a lot of time that you value quite a bit. So I think there's an element of just learning and trusting by doing, if that makes sense.
No, great point, actually. Google Maps and vaccination, yes, we may not understand how it works, but then for sure we trust it and we adopt it. Now, this is really good. Shweta, anything to add on to this particular point of explainability or trust in your world on AI adoption?
Sure. So I think there's two kind of big challenges. One is when you're dealing with mass consumers. So the example that Shanchao gave, it's really around ensuring transactional integrity. So basically, every single transaction has to, every cent counts. That's one set of issues. And I think Jan addressed another set of issues around trust, which is how do I actually even trust or understand what's going on in the AI? And I think that what Jan mentioned is actually quite valuable. No one's going to sort of suddenly have a PhD in AI or statistics. So the fact that you get used to it and it becomes part of your your routine. The thing is that within, for example, investing, the danger is also that you have regime shifts. You have non-stationary distributions where basically let's say the central bank suddenly changes the interest rate. Then the rules of the game change, and so some of the prior models don't work anymore as well. So you have these types of issues, and so I think there's also a third approach, which is kind of it's not the mainstream deep learning statistics heavy approach, but it's much more around sort of causal models and structural models that allow you to kind of retrace the lineage of how things were inferred. But again, there, it can get convoluted in explaining to people. So I think, the real point is, number one, I don't think anyone blindly trusts any technology. You don't trust nuclear science or anything to do. It's actually how you use it. So as a truth searching mechanism, AI can fail sometimes. Right? Because it's a model, it's an approximation, or there's regime shifts, as I mentioned. But as a decision-making tool, it's very, very useful. And so as long as you're aware of those limitations and people are kind of, have that kind of awareness that it's really around how do you make your decisions? How do I drive across the traffic jam or across the roadblocks? And the AI is giving me indications on how to do that. That's, I think, the key point. Versus, I'm actually going to optimize and get a better accuracy to the 10th decimal point, because even I wouldn't trust necessarily the results because there's not enough data in the world. So I think that for fundamental domains where there's issues of risk and uncertainty, such as in investing, I think you have to live with that. But no model is perfect, and I think that's that's a key realization.
No, thank you, Shweta. I think that's so right on the subject. There is another, this whole operationalization of AI in terms of various government taking approaches, writing policies. There have been guidelines within Europe about how possibly we should look at maybe more of operationalization of guidelines and avoiding those ethical issues. Now, and there have been various inconsistencies and gaps in these guidelines, like every country trying to publish their own standards. Where do you think, how do we really align the operationalization part of it? One part, for sure, I got Jan and Shweta, is that by adoption in terms of seeing the advantages and also possibly seeing nobody really needs to understand the sciences or exact algorithm behind it. But then would these regulations approach or would these guidelines approach really work? And this question could be all across this weekend, whoever feels like having a point of view on this one. Maybe I can start, Zian, with you, and then we can go around. Zian, we can start with you.
Yeah. You mean me? Sorry.
Sorry.
Sorry, I thought it was Ian. Sorry. So I was still in the formal question. So basically, just a quick think from my side is that actually last year I developed two systems. So one is exactly for stock price prediction based on the fresh news. So you are given Bloomberg, Reuters, there are thousands of news every day publishing in the media. But the point is, how is that impact my portfolio, right? So we need attention-based model to that you can do the causal inference based on these attention-based models. So you don't only tell me is that up or down. You give me reasons. You give me top 10 reasons, top 20 reasons, so that I can make a decision by myself. So the model, AI model itself's function is more like, just as Yan mentioned, it's like a Google Map. I just gave you a guidance where to go. Possibly this have a higher weight than other facts, than other events. So you please make a decision by yourself. So whether it's up or down, it's actually your decision. What I can help is to make your save your time, right? I can give you a list of ranked event, of ranked happening news, which possibly are most relevant to your portfolio. So the relevant score can be computed in a very quick way by AI hardware and software. And the first thing, the second one is actually, maybe possibly that in Europe, there is a shared task about the financial causal inference. So you are given so many documents, financial reports, technical news from the third party, Bloomberg, Reuters. Please give me what's the reason and what's the cause, what's the effect. So you have to extract all this information from the plain text and then to join the shared task. The good thing is that NVIDIA, we ranked the second globally. So yesterday we submitted the result. So if you are interested, you can check the shared task. It's called the financial causal inference shared task. So it means that people globally are doing data construction, algorithms, and the related work to make things better, to be more explainable, to be more trusted by our users. Yeah, thank you.
Thank you, Zian. Thank you. Yan, from your side, any closing thoughts on this subject, especially like when we talk about guidelines and standards from government coming up, how much they should intervene, and just like overall closing thoughts from your side. Yan, you're on mute, right?
Sorry about that. The main thread that I think has been going through this conversation is that it seems like the adoption of AI is probably going to be in stages, and it seems like the first stage could be more the type of augmented intelligence. So, touching on the things that we talk about, is it going to lead to job losses? Is it going to lead to replacement of people's decision-making power and so on? And my sense is no. I think that what we're going to see in finance in particular is that initially you're going to see increased productivity, because what it's going to do is hopefully help you organize the data and information in a way that helps you make a decision in a more informed manner, and therefore increases human agency rather than decreasing it. So I think that in my sense is that's going to be stage one. Whether or not we then get to stage two, which is where you have completely, segments of the economy where AI is completely autonomous and actually humans have abandoned that part at all, is probably a little bit too far in the future, right? Because we're seeing it in certain areas where it's far more advanced than in finance, and there are still big questions as to what you can actually do and how far you can just leave AI completely alone. So I would say the government should initially focus on regulating probably these steps, basically. To what extent should we have protections for the user when some of these products are out, have a level of transparency? Also people call AI all sorts of things because to an extent it's become a buzzword. So there should be some standards also put in place as to what products are being rolled out on that front. The second part, where you get to autonomous functioning of AI systems, I think it's going to be more question of ethics, and I don't really want to go into that now because it is a much, much larger issue. But in the immediate future, I would say having regulatory standards about where and how AI systems should be deployed, transparency about what it actually entails, maybe limitations as to how far you're able to use them, what areas you're able to use them. That would be the kind of the practical framework that I think governments could help set up.
No, that's really one of the most optimum way of approaching this whole subject. Shota, any closing comments from your side on the larger subject of AI in financial services and the role of possible regulations?
Yeah, so I think again, AI as a practical matter is much more advanced in other domains than finance. For different reasons, right? I mean, I think there's a lot more data, for example, in medical pharma or even autonomous driving. And again, in finance, you have these issues of if you're talking about financial markets, the data is actually not that big unless you're looking at tick level data. And you get these non-stationarities and regime shifts, as I mentioned. So it's a very, I think that a lot of the kind of the ethical and slash kind of operational challenges are actually being confronted in other domains, such as autonomous driving, et cetera. And so that will help guide a little bit how that's going to sort of impact the financial services industry. However, I think that one thing is, again, my sense is that government possibly could set standards for how to identify and detect and see where there might be biases, for example. So, how much, what's a standard for a model where you do see biases, because this doesn't impact financial decision making and also the livelihoods of people that depend on these types of services. So I think that's an area where possibly government can contemplate how to do that. I think it'll be difficult. That's one area. And then the other, which I think is less for government, but possibly international industry level standards with some government help, is setting standards for for data sharing, for kind of protocols for different models to talk to each other. What I see is different brilliant people working in pockets across the world. And so, if there's something like an IEEE or, ISO standard for how do you get all of these things to talk to each other much more easily, because, as Jan mentioned, and as Shanshao's done, you're at this point, you're really trying to integrate various heterogeneous data sets. You're integrating heterogeneous models and approaches. So unless there's sort of a standard language or framework on how all of these things can operate, I think that it'll still be in the hands of few experts. And in order to democratize this more, I think it's easier if you create libraries and standards that are kind of a lot more accessible and a lot better understood. And this goes to the question again of employment and skilling up. Right now AI is kind of like this. It's like a temple of priests that know some secret. And I think in order to sort of mainstream this more, it needs to be sort of opened up to more standards.
Thank you, Shweta. Thank you. That's really good closing. Zian, anything from your side? Last closing thoughts?
Okay, thank you very much. I really enjoyed the sharing from Yan and Shweta. Actually, just another real case. So in terms of government involving in financial service in China, actually the company named Ant Finance was failed IPO last year. So because there are too many not clear financial derivatives in the company, and so many not the government have made the rules about the financial services they provide. So basically, it's come to a big issue about how do we treat finance in the whole world of industry, right? So we frequently take it as more like a blood in China and in a lot of markets. It means that it's not the heart. So in the Wall Street journals, the Wall Street companies made a lot of things, right, globally, 2008 and so many crises. So basically, we should be very, very keep in mind that finance is more like a blood. So we should care about the whole body, right? The manufacturing, a lot of real industry still need to be benefit from finance, but it not mean that finance will be in the center of the industry world, right? So we need to manufacturing solve a lot of people's job through manufacturing, and there could be a lot of levels of manufacturing. But I still personally believe that finance could benefit all this industry world, but also we need some control globally and from government that the financial companies and the banks, securities do not go that far to it might short-term benefits, short-term interest, but more care about long-term, maybe 10 years, 20 years investigation, so that the world will maybe much better than it was. Yeah, thank you for, it's all from my side.
Thank you, Zian. Yeah, one has to be much better than what we are today. So thank you so much for such a lively discussion and amazing thoughts. Thanks, Kevin, for putting us together. Thank you, Jan. Thank you, Shota. And thank you, Zian, for such a good discussion.
Thank you very much. Really good
Thank
to
you
meet
very
you all.
Thank you. Nice to
Bye-bye.
As a reminder, if you have questions, please submit them to the Q&A widget and we'll try our best to answer now. Thank you all for joining us today.
Ladies and gentlemen, first of all, let me thank Douglas for his outstanding keynote, all our speakers for their great insights and the different perspectives, Puru for his excellent panel moderation, and my colleague Eric and the NVIDIA team for the great preparation. Very much appreciated indeed. Without any doubt, Asia is at the forefront of using artificial intelligence in finance and embraces this new technology. Today, we discuss the priority areas for using artificial intelligence in the financial industry, in particular in the banking and insurance sector. We also talked about the key challenges in deploying artificial intelligence and bringing it to success. Using artificial intelligence requires skills in data analysis and related programming, which are still scarce. We exchange views on how we can reskill or train the staff we need for that. Access to data is crucial for implementing artificial intelligence. Most AI models need huge data sets from different sources to be effective. That requires data sharing and solving privacy and data protection issues. Furthermore, we discussed whether and how to regulate financial services based on artificial intelligence. Last but not least, we looked at the ethical aspects of artificial intelligence. In particular, how we implement it in a transparent and explainable way for creating the necessary trust among the users of AI-powered financial services. Given all those complex issues, it is critical that the financial centers in Asia exchange views and best practices on AI, which is something that we actively support at the World Alliance of International Financial Centers. In addition to artificial intelligence, we also regularly discuss developments in fintech, inclusive finance, sustainable finance, financing of small and medium-sized enterprises, and over the past 1.5 years, how financial centers can support the post-pandemic economic recovery. Please check our website for several publications on those topics. Furthermore, please consider following our work. The best way to do so is to subscribe to our monthly newsletter or our social media channels on LinkedIn and Twitter. Finally, I want to thank you very much for joining our webinar. Also on behalf of our partners, the World Economic Forum and NVIDIA. The next webinar in this series will focus on Russia CIS. We will announce the date shortly, and we would be delighted to welcome you back.